You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again to view some volatility. It's time for Volatility Views, the premier program for volatility. Easy for me to say, volatility traders. A lot of things going on here in the studio today, and you know it was a touch and go whether I was even going to make it today. I got the call, I got the summons that every American loves and or dreads at the same time, which is of course our civic duty to do jury duty. So it's touch and go whether I'd even be able to make the show today. But we made it happen, thankfully. The other tried and true American tradition of getting out of jury duty, which is actually something I didn't have to do, because they do this ridiculous thing here in Chicago called standby jury, which makes no sense because you have to set aside all your time and do all the same planning you have to do to be on the jury, but you don't know until literally less than 12 hours ahead of time whether you need to actually go or not. So it's kind of like all the hassle of jury duty without any of the other stuff that goes with it. So genius stuff. Thankfully, we got a good crew willing to step into the breach in case I couldn't make it happen today. Starting off, let's go all the way out to the hinterlands, not of Maine this time, but one state or so adjacent to New Hampshire, where we are the coast, aka the coastline of New England, where we are joined by good old Mr. Matt Amberson, the founder and principal of ORATS. I think Matt, have you recovered from your panel duty down there at OIC, sir? And do they have this ridiculous tradition of standby jury? Do they have that in New Hampshire as well?
We're the live free or die state, so we don't have silly traditions like they do in Chicago. And yes, I'm recovered from the panel. I had a good time down there. My favorite quote was Shelley's quote, "I want eighths and quarters back so I could trade on the floor again." So I had a great time down at OIC, and nice seeing everyone down there.
Yes, I did hear that, all courtesy of the panel audio from the conference, which of course you guys hopefully have heard. If not, you can check it out exclusively on the Options Insider Radio Network. You can find it in the network feed or go to our special events section there that has all the different recent conferences we've covered, including OIC. As well as the trading show and Swan and a bunch of other things there for recent endeavors. You guys don't have to travel the country and pay all this money to go to these events. We do it for you, make it nice. Or if you went to the event, but you missed a session, we got you covered there as well. Speaking of Shelley, Mr. Shelley Brown, the Executive Vice President of MIAX, we are also joined by him today on the program. Shelley, welcome back. Do they have standby jury in New Jersey, sir?
Good afternoon, Mark. Yes, they do. You don't know till late at night, the night before, whether or not you need to go and serve. And I actually think the payoffs in New Jersey are similar to the payoffs in Illinois if you get called.
Yeah, you get a whole, $19 or something for your time for the day. Something along
I
those
wasn't
lines.
talking about that one.
Yeah, I wasn't even going to get to the money. So that barely covers lunch down at the Daily Center, and they're over there. But still, interesting stuff. And last but not least, the Meatball. Who knows where he's beaming in from? He could be beaming in from the Option Pit World HQ. He could be beaming in from a town that changed America. He could be beaming in from a Costco in the beans aisle near you. Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the show. Where are you beaming in from today? And do they have crazy jury duty practices in that weird province you're coming from?
I don't know about the jury duty. I'm calling from the parking lot of Don's World of Sports. I am waiting for the Riverside Rockets gear to get embroidered. I'm currently lacking my coach's personally embroidered polo shirt for games. So while they finish up the embroidery on my polo, I am taking volatility views from the parking lot inside my beautiful Cadillac Escalade.
Yes, you would drive an Escalade. That is appropriate, sir. All right, with the team mostly assembled, let's dive right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. This is, of course, the portion of the show you know and love, where we review the week that was and indeed still is from volatility trading and trending and analysis and unusual activity and all sorts of fun perspectives. Coming into showtime here a little bit past 1 p.m. Central in the one true time zone, if you will. We're seeing, we've been doing this dance for a while. We continue to do this dance, the will they, won't they dance. That is the trade war, a.k.a. the tweet war back and forth between us and China, everything else going on over there. We give, we take, the market gives, the market takes, sometimes aggressively. Last week we were in that moment of, oh my goodness, are we waiting for the output of the trade war? It seemed like we were at a little bit more in terms of what was going to go on from a vol perspective. Then, of course, we saw some stuff come off this week, then come back in fairly aggressively, and it's starting to do the latter again now, which is start to come off a little bit. Most of the major indices up, not up huge today, but up firmly in the green. Most of them around up about 1/3 of a percentage point or so. The NASDAQ and the Dow up a little bit more, up almost not quite half, but a little bit closer to that 0.5% or so. So NASDAQ has been leading the charge to the upside and to the downside of late, even though it's not quite as extreme today. And of course, also all this green on the screen and indeed the approaching long weekend means VIX Cash taking a little bit of a break today, off about a handle, a little bit shy of the 16 handle at this point, is about 15.90 or so. It was about 16.25 coming into showtime, so already having given up another quarter of a handle or so. So it's up from last show, but not a ton, up about half a handle. We're seeing similar levels out there in Spikes land, where it was up about 3/4 of a handle from last show up into showtime. And actually, Spikes is still kind of staying at that range, right around 16.5. So it still is up about up about 3/4 of a handle from last show. So a little bit more premium back in the weeds. Of course, if you factor in the fact that we have a long weekend and everything else coming up, it makes it even more interesting, the fact that we're even at or around those similar levels from last week, maybe showing that perhaps the market is still awaiting that other shoe to drop. Let's go around the horn. Let's go back the opposite of the way we came. Let's start with you, Mr. Meatball, who's out there waiting for fine embroidery to be done. A lot going on in the vol space. The vol gives, it takes away, it gives again. We're kind of in the mild takeaway phase right now. What's catching your eye? What are the crazes in the pit chat? What are they up to today?
Well, what I'm going to say is every time we get a China spook, vol moves less, and the market seems to move less. I feel like a lot of this, we're getting a lot of fatigue from this China fear. I think it's it's a little crazy how how every little comment, the news reading algorithms seem to go off. But I'll tell you, it feels like this is this is wearing off and wearing down. And today, yesterday we're off big, but really vol didn't do that much. and today we're up a little bit, and they're crushing it. So I don't know. I look at this as maybe a waning crisis. I feel like we have less and less exposure. Interestingly, I was in Manhattan last week, Mark, and I picked up some mini Statue of Liberties to give people, and I just pulled out one, and it's a beautiful Statue of Liberty. Then I looked on the bottom of it, and you know what it said?
It says "Made in China."
It said it was made in China. Yes. So,
perhaps a microcosm for what the position we find ourselves in as a nation right now.
I think it actually is a perfect microcosm for the state of our nation.
There is a little bit of truth to that. Are you feeling that maybe this shall we say a little bit of whacking, a little bit of taking some vol out? Is it, you think it's overdone, or we are going into that long weekend as well, so that's kind of a double whammy hitting us right now?
No, I don't. It doesn't feel overdone. I feel like what's going to be interesting is normally coming off of a long weekend, you'd expect VIX to be up from kind of the weekend adjustment. I'm wondering whether we'll see that because, a 16 VIX, you need a lot of movement on a daily basis to kind of hold that, or a 16.5 spikes. And, we're seeing that kind of movement, once a week, right? We get a real hard vol move once a week, and the rest of the time it's, just kind of sitting around. And really, most of these weeks we've gone nowhere, right? We've been down 70 in a day and then up 70 the next 4. So yesterday we gave up 40 points, 38 points, something like that. And today we're up 6-7 points. We'll be up 6 or 7 points, or maybe 15 on Tuesday. And then, we'll climb all the way back up, and then what'll happen, and then some vol will drop, and we'll drop 35 points, and the VIX will rally again. But the VIX and the spikes both feel extremely heavy to me. And I don't know if you guys are, Shelly and Matt, or you are feeling the same way, but vol as in general has seemed extremely heavy, even yesterday.
I think you could certainly make that claim, and maybe some of the market action today bearing that out. Matt, I know you're running a lot of models over there in ORAT's land, as well as back testing for all your clients, as well as cranking away at all the fun earnings volatility. We'll get to all of that in a little bit. Still a lot of that fun stuff popping off as well. It is always refreshing to talk micro with you, because it lets us take a break from the madness that is the macro out there. But it is macro headwinds hitting the market pretty much these days. What's catching your eye from a broad volatility perspective, Matt? And what are some of those models you guys are cranking away at ORATs all the time? What are they telling you these days?
Well, I have to agree with Mark, and my life always feels so boring.
Okay, wait, I have to hang up on you right now because you're agreeing with Mark. So that's the first sign that things are going astray, sir.
Well,
going bad.
He's cruising in an Escalade, and he's having fun out there, and I'm sitting chained to my desk here. But that's what we're seeing. We're seeing nothing happens, and then there's a one-day volatility move. We measure one-day vols here at ORATs, and all of a sudden it'll just pop, and then nothing for a while. But he's right. There, the 10-day SPY is 16.5, and that's where the vol is. So I don't know if it seems like it's the vol is about right, but it seems so contrived. With one tweet and the market jumps all over the place. But I read about the Trump put now. 4% under the money. He won't let it get underneath there. So, it's tough to get any momentum one way or the other right now. It's so choppy. Vol still in the top over 70 percentile, at least in SPY. And, there's still some short-term contango. That's what we look at here. But it's just, so it's tough to get a read on the market right now. It was bad around the 9th of May, obviously. And it got better. Now it's kind of going back. And then as far as the VIX goes, we had a client that wanted me to do some back testing, and he was wondering how being long calls looked when the VIX is over 15. And so we ran a bunch of tests. We have this new optimizer, Mark, that you'd love. You could run hundreds of tests and different variations and such, but none of the calls look good. So I started messing around with some short call spreads, and those looked a lot better. And then I'm looking at the volume that's going on, and that's where the big volume, the big open interest at least is, June 25s, and it looks like they're pushing them out to July right now. So, if you ask me about the market, it looks like people are expecting more, but they're pushing the time horizon out. And it feels heavy, but who knows what could happen? It feels contrived to me, Mark.
The market feels contrived just about every day, doesn't it? What's going on out there? That's like the first day when I first walked on the floor of the SIBO, and I had all these ideas for different analyses and fundamental and technical and all these things. And I come in and I talk to the old timers in the pit, and I say, "Oh, why are we up today?" And they're like, "Hey, more buyers than sellers, kid." And I said, "That's ridiculous." And I'll go do these things. And after a while, I started to see the wisdom, the wisdom of that viewpoint. Excuse me. And last but not least, Shelley, I know hopefully, like Matt, you have indeed recovered from, you guys had the unenviable burden of having to plan that entire conference. I know it takes a lot longer than most people who just come to it once a year, how much longer than they actually thought. You guys had the doubly unenviable position of having to pretty much pull all that off in the final few weeks here, where you had other things going on, like, I don't know, maybe launching a new vol product, and maybe, launching a third options exchange, and maybe talking about an equities exchange and everything else. So I don't know if you could have picked a worse time for you, Shelley, to have to drop conference planning into your lap as well. You and John and the whole team over there at MIAX. But have you finally recovered from that, A, and B, how happy are you now, Shelley, to be actually able to once again focus on your job of actually, like running an exchange, the actual job you do?
It's been a busy spring, needless to say. We're excited about all those things you spoke about. We're excited OIC went well. Seems to have been very well received. The whole industry participated. All the exchanges did a great job supporting it as well. We're very pleased. And you forgot to talk about, we're also working on launching a new future.
Oh, well, yeah, that was a late addition to the party. We don't count that. That's easy. That's by the way, I know you got to run in a bit, but I do have a listener question about that for you in a little bit. But catch us up. What's been on your radar? What's been lighting up your tape? How go things in Spike's land since the last time we talked, sir?
Yeah, things have been pretty much status quo. We definitely had some interest. There's been some customer orders in and out of the marketplace. Seeing a little bit more customer activity. We're seeing situations where customers are coming in mid-market and both spreads and simple orders, and the market makers are reacting. There's been a little market maker to market maker interaction. More importantly, we've been getting a lot more calls from the institutional side with interest in the product. We also have a couple of new pricing programs coming out for the first of the month, pending SEC approval, of course. We're creating a new membership type that'll allow a member to come in if all they want to trade is Spike, our proprietary product, greatly reduced membership fees. The other incentive we're adding for June 1st, pending SEC approval, is we're going to add a maker rebate for market makers that are market turners. So if you improve the market, you'll get a rebate, and it's a pricing incentive designed to try to tighten the markets up.
I like it. Market Turner rebate. That's a good. If I could say it, it has a good ring to it. Shelley, I know you got to run. You actually got to go do the business of actually running the aforementioned exchanges. I'm going to cheat though before you go. We have a couple of listener questions that are uniquely up your alley. So rather than have Mark and Matt and I kind of struggle through them later, I'll give you a chance. I'll bump them up now, give them a chance to get their questions asked early here. This first one here from TLP3. We've been getting this question a lot. I just picked this one, but there's a bunch of others out there with a similar question. Maybe you can answer it for him, Shelley. He wants to know, or she, I don't know. Do you have any more info on the Spikes futures like the contract specs? Is there anything more you can give our audience, Shelley? They're rabid for more info.
Sure. Contract specs, there'll be a $1,000 multiplier. We're still debating whether the trading increment should be in nickels or pennies. There will be monthlies, no weeklies. The product will clear at Minneapolis Grain Exchange Clearing. It'll be very similar look and feel to the other products that are in the volatility space currently.
Can I suggest doing nickel? Shelly, can I put my opinion in on whether you do pennies or nickels? I would encourage you guys to do. I want you guys to do nickels. I think that'll draw more traders. Traders like a big tick, and so one of the things that makes futures market makers, futures guys, like kind of salivate about and why they like the VIX contract is that big $50 tick. It makes it really attractive relative to a future that was supposed to be super successful that really didn't do much was the Dow. Remember how big the Dow future was supposed to be, guys? At CME, It was going to be the biggest thing ever, right? Or that was Board of Trade. I'm sorry. It was going to be the biggest thing ever because everyone knows what the Dow is, and it never supplanted the S&P because the tick was only $5. So, and they couldn't get a lot of guys, trying to scalp using a $5 tick. They liked having the $12.50 on scalp on the S&P future. So that's just from my past experience trading. Where I would lean toward if I was in charge, but I want you guys have all sorts of market research at your fingertips that I don't have. So I will obviously we'll see where that lands. But I'm a big proponent of the nickel tick.
I like what Matt said before, kind of referring to Shelly's quote. Let's go eighths and quarters. Let's go old school. Let's just do it, Shelly. Bring it back. You can bring it back. You'll be the one product.
I was just going to say that eighths and quarters, and we'll put it on a trading floor.
I like all things about that. All right, we'll get you out of here on this one here, Shelly. One more. This comes from Nat M. I think we know the answer to this, but I'll let you say it officially. Nat wants to know, do the same market makers that make the VIX markets also make them in spikes? He says, fun show. Can you guys do more on the earnings volatility front? Well, stay tuned, Matt. You're going to have a bunch of that. And can I sign up to receive those earnings straddle reports? So I'll let Matt fill you in on that in a little bit. But Shelly, I think we know the answer to this, but clarify, Nat, here. Same crowd making markets and spikes. Maybe you got some new ones. What's going on there?
Certainly all the current market makers in spikes are VIX market makers as well. We do not have all the VIX market makers in spikes yet. A lot of firms are waiting to see when the product grows. But we have several new firms that are not currently trading spikes options that are very excited about trading the spikes futures. So I think we'll have more participation in the futures side, and we are targeting an early September launch for those futures.
There you go. All right, Shelly, you can go back about running your 27 exchanges over there now, sir. Anything you want to leave our audience with before you go? Now is the time.
I appreciate everybody's interest and questions. You're welcome to reach out to us directly at MyX Options via our website, myxoptions.com. There's links to the spikes there. You reach out to me directly through email there as well. And we appreciate everyone's interest and support in the product.
All right, sir. Take care. Enjoy that. Hopefully you don't get the standby notice that I got there in New Jersey. Enjoy, like I said, going back to running all. You have the equity exchange to deal with now as well. So lots of fun going over there as we keep on rolling here with all things volatility here. Going back to VIX futures here. Of course, it's been kind of an interesting beast for a while here. We've been kind of commenting and kind of scratching our heads on just how crazily flat, I think is the technical term, it has been out there in terms of, the market kind of making it effectively a coin flip. If you want to go from, let's say you want to roll from July to, let's say, Dece, you might as well, because it was cost you nothing to do that. I think we have some trades a little bit later on in VIX options that are reflecting that. Looking at the term structure coming into today, we saw a little bit more of a premium from the front future to the cash. About a half a handle more. It's about not quite 3/4 of a point, a little bit more than that from the cash to that front month future, which is of course the June future. Now you go out to July, all the way out to 2 months, and it's about 1 1/4 point, which is actually a little bit lower than it was last week. Last week was about 1.5 points, so it still shows how there's a little bit of inflection going on, a little bit of movement going on in the front portion of that curve. Then you go out to, let's say, September, and it's not even 1760, it's 1757, and you go all the way out to Dece, and it's actually cheaper. So it's actually 1743. So yes, you could actually get paid to roll from, let's say, Sep to Dece if you were so inclined. Interesting stuff out there. We joked before about the seasonality of VIX and the futures. They're obviously pricing that in, but they're also pricing in the fact that There are a lot of other shoes waiting to drop out there, and the market clearly doesn't know them, given how we're looking at the term structure. If you go all the way out to Jan of next year, it's not even an 18, it's 1794. Mr. Meatball, we talked about this before. It's still kind of, I think the technical term is weird. It's understandable. The market doesn't know, nobody knows. But still, it is kind of weird that you can almost get paid to roll from SEP to DECE right now in the VIX futures. Are you liking that hump, the humpback whale portion of the curve there?
Yeah, that's weird. And, and what's interesting is, they love front-running theoretical low vol in VIX, and then the last 2 Decembers, that hasn't worked at all. You got to wonder when these guys are gonna learn their lesson and not just depressed December. It just doesn't seem to. I mean, when was the last time we actually had a December that was actually, on the bottom 2 or 3 months in terms of volatility?
I'm glad you said that, because I was going to point out the exact same thing. We used to have Russell on here, and he'd point out the seasonality of around Christmas time and all that, and that point is right. But December the last few years has been very tumultuous. I mean, look, we saw the nadir of the market, and then the rebound off of it was what? It was Christmas Eve last year. So last few years, it's been anything but. So I get it, the recent history, you can't be biased by that, but I would not be racing to annihilate DECE vol like apparently the rest of the market is right now out here. That was my first thought when I saw that. It's like, have these people not been here? Are they new to the market? Did they just come in January? Did they miss the last couple of years? Because this structure, the way it is right now, does not work for what we saw over the past couple of years. But again, the VIX futures curve, always a fun beast to poke and prod and analyze. We could spend all day doing that like your friends the Thompson twins do over there, Mr. Meatball. Instead, we'll keep on rolling. Let's get into what's going on the option side of the fence. Let's look at spikes first. There was a lot of OI last week. A lot of that came off the board this week. A lot of it was May. Go figure. So most of the big positions now are pretty much out there in June. That June vertical still dominating the tape, 2025. It's clear, like Shelley mentioned, they're offering more incentives. Now, a lot of people are still waiting, I think, for that future, which is coming online in September. Clearly, from our listener mail, that is indeed the case. So if you're waiting out there to do even your small size 10 lots of things out there, it makes sense. You want to kind of see how this underlying is going to work first. But if you want to do small size out there, it is doable out there. We're seeing these prints go up. Now, it does seem like more and more retail are starting to trickle in. I'm seeing 3 lots and all sorts of weird stuff going up out there. So we didn't see that in the first couple of weeks. So now we're starting to see that. So it does seem like the broad retail side of the space is picking it up, if even the size, 10,000 up institutional guys, if they're not quite there yet. But I think for those guys, they definitely need a future. So they're clearly waiting for September. Let's go on out to VIX options land here. And given the fact that it's kind of not a huge move day, it's a kind of a light volume day. We've been seeing some barn burners of late out there in VIX options. ADV reflecting that. We were talking for a while here how the VIX was kind of unseasonably low, and ADV well shy of 500,000 contracts, which at this point of the year it probably shouldn't. It should be a lot higher, and or at least 600,000 or so. And we're seeing that reflected now, which is over that. It's over 700,000 right now. So that's a much healthier, dare I say, robust level of ADV for VIX options. In terms of, let's see here, what is lighting up the tape out here in VIX options land this week? Well, it is pretty much all calls all the time, with the exception of 2 puts. We'll get to that. Number 10 out here, we got obviously no May on the board, so a lot of OI has come off. It was, I think, north of 10 million last week. OI about 6.6 million this week. About 5 million on the calls, about 1.6 million on the puts. Let's get out here and see what's actually up, what's open, what people are trading out here. Number 10 of the top 10, the June 26s with 140,000 contracts open. Number 9, the June 27s, $1.42 on the tape. Number 8, the AUG, our first and indeed only AUG on the list. The AUG 37 halves. That strike, the 37 half strike, does seem to capture the imagination a bit as well, which is interesting. We're going to see it again later on. So yeah, someone out there likes that 37 half strike to the tune of 145,000 contracts open on it. Number 7, the June 30s. We talk about 30s all the time. The 30s always have to have a place somewhere here as well. That is the case again. This time out to June, $1.59 on the tape out there. Number 6. June 37 halves. I told you that 37 half strike is capturing someone, or indeed many people's imagination right now. 160,000 open there. Number 5, the June 23s, $1.62 on the tape. Number 4, the June 22s, $1.71 on the tape. Then we get to our first put on the list. So the puts are not many of them, but they're high up. Interesting. A June 14 puts, $1.90 on the tape. Number 2, our second and final put on the list, the June 16 puts for $2.05. And number 1, that shows you how much the OI has come off. Number 1's only 266,000, so a little bit north of $250,000 for the June 25 calls. Lately, we've seen 400,000+ taking the number 1 spot out here. So $250,000 or so. That's a lot for most names, not for VIX. And we're seeing that reflected out here. So number 1 still the calls, but the puts up there, 2 and 3, and then the rest all calls again. You know, I think we talked about this before, Matt. Maybe we need to do some sort of back test as to why. I don't care what month it is. I don't care what time of year it is, what's going on. There's chances are if I roll this top 10 any given day throughout the year, there's going to be size OI on that 30 strike. I don't care if VIX is at 9 or if VIX is at 42. It's just the 30 strike. Now there's 37 halves too. That's a different conversation. But the 30 strike, I don't know what that is about the 30 strike. Maybe, Matt, do you have an answer in all of your myriad data? And maybe that's a back test you could do. Maybe we should call people up and say, why do you like the 30? Maybe it's more of a high touch thing. What do you think?
No, people will look at absolute levels of the VIX, and we see people doing back testing. We can now use the VIX as a back test, the actual number, and they'll actually put in the absolute number for VIX, and they're obviously using 20 a lot, but now we're seeing 30. I haven't seen 37 yet, but now you're pointing that out to me, so I'll look for it. So I think it's just a number that they put out there, and they could communicate it to their clients, and they're trading that number, Mark.
Yeah, there is this round number fascination we see now. We see it all the time, and you talk TWIFO, we talk crude and other things. They like the 60 handle. They like 1,300 in gold. So it does happen in a lot of products, but it's persistent in VIX. We could be, if we're trading, 1,100 in gold, I don't think 1,300 is going to be lighting up the tape. If we're trading 9 in VIX, 30s are still going to be lighting up the tape. It's just this weird persistence. Someone's got a model out there that says, 30 is the strike for hedging. I don't know what it is, but chances are, and it's here again this month, you pick a month, it's going to be the 30 handle out there somewhere. And it's interesting, to say the least. I've been doing the show for quite a while. I've yet to see the reason outside of what you just said, which is people like a nice round number. But then why not 20 when the VIX is 9? Why not 40? That's a little bit maybe of a bridge too far, but still, even 35. It's interesting and or weird. Send in your ideas, listeners. Why do you think maybe you're one of those people out there who loves the 30 handle? Let us know what you're up to out there. Let's see what's up to. People are up to today. Like I said, kind of light volume today coming into the board. Only $1.16 on the tape coming into showtime, so not huge numbers lighting it up today. The biggest print today, pretty much, it looks like about 13,000 of the single leg print, at least, doing about 13,000 of the June 23s. These are expiring on the 26th, so next week. So out there in the weeklies. Looks like these are probably an overwrite, 23s, but we shall see. They went up late, so it's kind of hard to read the tea leaves when the print is so out of whack like that. Then we saw 16,000 contracts going up. Looks like a roll from June to July. Looks like we're in that time of year here. Rolling, a lot of rolls going out. Looks like rolling the June 24s out to July, so getting an extra month out there. Like we're saying, it's cheap to roll right now, so you might as well do it. In this case, it actually looks like it cost them about 38 cents to do that 8,000 times, which is maybe more than I would have thought. So interesting stuff out here. Maybe you got to play with your strikes a little bit. Thursday, we saw the big print of the day. The big kind of option du jour was the July 15 put. Somebody liked those. Liked them a lot, to the tune of 25,000. I love VIX because you can always count on VIX to put up trades exactly mid-market. If there's a way to split the uprights exactly, they will do that. We got 75 at 80. They went up for a 77 half. So literally splitting the uprights. They had to work to get those up, and they did. So I guess ballyhoo to that broker out there. So interesting stuff out here. Maybe someone drawing a line in the sand on the 15 side, or given the fact what we're seeing right now is erosion, maybe the latter kind of coming in to gobble those bad boys up. We also saw a pretty wide vertical going up 10,000 times on Thursday. It was the July 26.50. This is an interesting one. Getting 15 cents for those 50 calls, so I guess that's why they decided to write them. On first blush, you're like, why would you even bother writing that strike? But interesting, 24 handle vertical. Looks like they got it off for about 58 cents here on this. 10,000 times. Looks like paper probably buying this bad boy. But again, analyses may vary here. Going up to, and again, also on Thursday, upside love about 10,000 of the July 24 calls going up on the offer for 90 cents. So upside calls were kind of the order of the day. We saw that also continued on Wednesday. That was the kind of one of the bigger trading days of the week. About 27,000 of the July 26 going up. Again, exactly mid-market for 60 cents on the upside. That was not opening. There's a lot of size OI on that strike as well. Also saw looks like a bit of a roll. Again, maybe taking advantage of some of that term structure. They rolled the AUG 30. Here we go again, Matt. 37.5. So this is another strike that people clearly love. They rolled 10,000 times the AUG 37.5 out to October, and it cost them a whopping 6 cents. This is what I mean by that latter portion of that curve being just, I think the technical term is ridiculously flat. 6 cents. Why wouldn't you roll from AUG to October? You get 2 more months for 6 cents. So yeah, go do it, listeners. If you're sitting on some paper around that time, get yourselves a few more months for pennies on the dollar. Why wouldn't you do it? We're seeing a lot of that going up. We're seeing June to July. June to July is not as cheap of a roll. The structure there, as you point out, is not as flat. But once you get from like July and September out to the latter portion of the curve there, it gets nice and flat. You're seeing rolls here, June to July as well. 14 cents for the June to July 16 put roll, 10,000 times. That was also on Wednesday. And our big trade of the week actually went up on Tuesday. It looks like total of 100,000 contracts going up in a $1 put spread. 50,000 of the July 15, 16 put spreads going up for a whopping 54 cents. Let's see how this bad boy went up. Maybe these things are so tight out here, what they did buying or selling. It is interesting. Mr. Meatball, I'm sure you saw this one going up. This is kind of the big print of the week. What are your thoughts, indeed, on if they bought it, paying 54 cents for a $1 put spread? They're probably rolling at this point, but also paying 54 cents to roll down one handle. What are your thoughts on that? And then B, any other size or interesting paper catching your eye this week out here in VIX options land, sir?
Well, they're just they're biding their time, looking for that collapse. The one, I'll tell you what caught my eye. I want to talk May expiration, Mark. And if you had asked me Tuesday night what I thought May expiration was going to look like, I would have told you I think we're going to have a sub 14 print, because they traded 190,000 of the 15 puts and versus 170 some odd thousand of the 14 puts. Paper was consistently buying the 15 puts all day. And the open interest, the closing open interest on the 15 puts that settled 40 cents on Tuesday was about 297,000 Wednesday morning. Well, a judge overseeing a Qualcomm case completely screwed those buyers, because the Qualcomm news sent the market south. And instead of getting kind of a, what these traders probably thought, which was, a 1370, a 1410, some sort of print like that, the VIX printed 15.01. Could there be more dirt in the, talk about kicking someone while they're down. Not only did their trade lose, but it settled perfectly 1 penny out of the money. It was one of the more impressive things.
That's pretty impressive.
In one print they zapped. What's 40 cents times 300,000? That 12 million, or is that 120 million in premium just zapped, gone at once?
That's amazing. I feel pain. I feel their pain, so I don't want to laugh, but you kind of have to laugh at just the sheer madness of that. that's up there with how many times VXX flirted with 30 in January before bouncing off of it and never going near it for settlement again, but getting tantalizingly close. Those guys got closer. They were in it. They had it in their grasp. Yep. That's why we say, we said it before how many times, if you got it in your grasp, take it off, right? Don't let the Qualcomm judge steal your fortune.
That was unbelievable. I don't know if you saw that, Mark, but on Tuesday, talk about tweets that didn't age very well. On Tuesday, I'm like, this market feels like it wants to really see vol tank. And then, of course, the next 2 days, VIX goes from, flirting with 14 to 17.5. So go me. But wow, that was just a pretty impressive move in VIX. You know what I saw, and we don't normally see a lot of index buying. SPX. We don't usually talk SPX too much, but there was some really interesting trades yesterday that were bullish. Customers were buying the December 3200 and December 3250s. That's this December. So, what is that? A 6-month, 7-month option. They were buying the December 3200s, and they bought the December 3250s. They bought about 15,000 of them. Now, that's not a huge trade on its own for SPX, but an untied straight directional call buy. Normally you see 25, 30,000. It's all tied to futures. It's a big vol trade. This was a 15,000 contract in the SPX, straight directional bet on it going up. And because there was no futures tie, nothing to it. So really kind of an interesting trade in the SPX, which, normally we won't talk about that much, except for in terms of the, its vol output, which is VIX.
That's almost just weird on its face, just because it's not tied. Everything's size up there. I can't remember when I was out. Everything was quoted tied. That's just the way it's done.
Yeah.
It's so to see that, you're right. That kind of naked upside, type of play. That's strange in and of itself. Let alone the directional nature of that, which is also strange. Usually it's some, sort of funky, ratio spread swap, something like that. Someone's trying to arb the term structure. This is straight up buy-in for size and not tied. Yeah.
And it was going up right at the bottoms yesterday. So someone clearly was, saying, hey, I think it's a trade war play. It's a, grasses, the brighter skies ahead type of trade. Because you wouldn't be that far out of the money if you were doing it as some sort of short trade. I think this is a house making a big bet on a rally.
That's interesting. That's that's saying if that guy's right, then we were laughing about how cheap the DEIS future is for VIX, but that's way overpriced if that guy's right.
Yes.
So that's kind of interesting. Which sides of those I'd rather take? Would I rather take the crazy, which is about not quite 400 handles, but pretty close to it, upside in SPX by DEIS, or something on just the, let's say, maybe dramatically underpriced DEIS future for VIX out there. That's an interesting analysis maybe to be done. Matt, I'm going to give you homework. I'm just kidding. I always give Matt homework when he comes on the show, so he's probably cringing in terror right now. But it is interesting to consider two different viewpoints of what's going on out there at the end of the year. What do you guys think? DEIS usually quiet, seasonal period. Last couple of years, not so much. So are we making too much the last couple of years, or is maybe this guy right? We're going to be freaking rally ho mode by the end of the year. Are the VIX futures right? What do you think is correct? Meanwhile, let's keep on rolling, talking VIX futures. One of the primary ways people play that term structure is going out to VXX and hoping it erodes to naught. Coming into showtime here, let's see. We were at about a 28. Let's see where we are right now here. Looks like we think we're still right about, which at 28 listeners would be, it's about 28 and a quarter actually. So, puts it pretty much almost exactly unched from last show. So we saw all this vol in the broad space, all these sell-offs up and down in the S&P, and all that is translated to exactly nothing. Actually, a little bit of a gain out there in VXX this week. So everyone out there who loves to bet on their erosion, and I know most of you do, you got it, and then it went away, and that's why it can be so heartbreaking. That's why we said many times, if you're going to play that trade, make sure you have something in your back pocket. We were talking strangles last week and things. Something in your back pocket for when, like we saw in January, or even this past week, when it doesn't really go your way. It goes there and it comes back and it goes. It could be a very fickle mistress out here, VXX. In terms of what's the open size, it's interesting. It's kind of a tale of two tapes out here in VXX land. Overall, puts are dominating the top 10, but the top 5 is all pretty much calls, except for one. So the number 1 out here in VXX land are June 40s. Number 2, only put in the top 5, June 24 puts. Interesting, not even the 30 puts, 24 puts. That's interesting. Maybe the fact that we've been shy of 30 for a while now, people have rolled that down, taken it off. Number 3, the June 50s, 43,000. Number 4, June 45s for 36,000. And number 5, the June 80s, 35,000 of those. And the rest of it is all puts, June 25, 22, 23, 22, and 26 puts, but not the top 5. So there is still some upside lurking. Maybe those people out here, that's reflecting what we're just talking about. Maybe they are putting those trades in their back pocket for a rainy or indeed a spiky, pun intended, day in the vol space. A total open interest almost exactly 2 million contracts, about 1.1 on the calls and about 900,000 on the put. So calls out winning the dance in the broad the broad OI out there as well. Let's see what's going on out there really quickly. Not a lot lighting it up to today. Pretty light day. Only the biggest trades are a couple thousand lots of July 22 puts and the June 31 calls, both going up. Yesterday was a decent print day. We saw a pretty sized vertical going up. July 32.42 going up for looks like about $1.51 or so. Let's see up here. Looks like, again, these are pretty tight out here in VXX. So looks like probably buying. I would probably lean that they probably, given what we've seen out there, that's probably what they want. Doing that 20,832 times opening on both legs. Mr. Meatball, right now, if I had to ask you, July 32.42, would you rather buy it or sell it in VXX? For $1.50.
July 32.42 call spread, huh? I would probably, just from a risk perspective, I'd rather buy it, but that it's likely to win on the sale side.
Yeah, it's a weird one.
Generally speaking, I know that there's edge in selling VXX call spreads, but we find I feel like in terms of adjusted for volatility, put buying is way more effective. That's just me, but Matt's probably going to tell me I'm wrong.
Matt, tell him he's wrong. Say, Jane, you ignorant slut.
Now you gave me more homework because I just was thinking about that right now, Mark. I'm going to go do that test, but we did it for the VIX, but I want to do it for the VXX and see how it looks. That's a good one. I'll put it in my back pocket. But those puts look cheap. See, I would buy that from a risk perspective as well. But those puts look those lower June puts look cheap to me. The June 24s, 25 cents. That seems okay to me.
You like there's some cheap out of the money stuff that look, up until Wednesday, I really liked the May 31 24.5 puts for 6 cents. I said, we could get a push in VXX down to 26 by today, and those will be worth 30 cents. That was my plan. And then, of course, the China trade discussion kind of fell apart. But yeah, there's a lot of cheap downside stuff that looks inexpensive. One of the things that we've got our Edge Hunter product, and one of our sheets does a VIX put buying VXX, VIX, and UVXY put buying optimization. So it actually will tell you relative to decay in the VIX product versus the decay in the option, what is the option I should buy in terms of an in-the-money put in order to capture the highest amount of edge in quote-unquote roll yield. And, that's one of the things I like about in-the-money puts is that it ends up you're capturing that roll yield, and, as it runs away from you, your decay, you're getting more exposure to roll and less exposure to decay. So, anyway, just more fun.
You said it wrong. I said to Andrew yesterday. You said it wrong. You say Edge Hunter. That's how you say it.
Edge Hunter.
There you go.
Yeah, that was my favorite show in the '80s. Edge Hunter.
Was that on after Streak Hawk and before Equalizer?
Exactly. It was on with McMillan and right before McMillan and wife.
It's a lost art now to do the one man kind of crusader for justice / vigilante show, typically with a cool car or a cool helicopter or a cool motorcycle. That was an art of the '80s that has been lost to time. I think there were legions of one man against the world shows. You don't really see those as much anymore. I guess it's a lost art. But yeah, check it out. Lost art. You guys get attracted to selling that upside, but yeah, it's kind of hard from sell a $10 spread for what was it, $1.50 or whatever. Just the old market makers. I think all of us kind of recoils at those types of things. All right, let's keep on rolling. Matt, one of the reasons I wanted to have you on is I like to talk micro in these crazy macro times. It seems like saner heads prevail there. We are still in the teeth of earnings season. A lot reporting this week. We had Home Depot, JCPenney, Kohl's, AutoZone on Tuesday. We had Lowe's and Target on Wednesday. We had Best Buy yesterday and Intuit after the bell. TD Ameritrade, may have heard of them. A lot going on still this week. Maersk, the shipping company today. A lot going on. Catch us up, sir. What's been lighting up your tape? What are some of the big surprises and developments out there in the land of earnings volatility since the last time we talked?
Yeah, Mark. There is a lot going on. It was a strange quarter for us. Not as profitable on our model, but coming out after that Dees really kind of shook all the earnings up and all the earnings modeling with the extremely high volatility in AUK and Dees. But what we're seeing is now a lot more winners from sellers than to buyers, as big as we've ever seen. So, like I said, our models are reacting like 70-30. It's usually 60-40. The sellers win versus the buyers, but now the sellers are winning as far as the pricing going into earnings versus what is actually experienced. So those are the big one. Those are the big signals that we're getting out of this earnings season. Just that it's we were on the floor. I was always at least flat premium, so it's been a difficult for buyers earnings season this time. And as far as just recently, we had a few come out. Autodesk, INTU had a big move compared to what was expected. But a lot of them are not moving, and one of the big things one of the big surprises that I came across over looking at thousands of these earnings moves is the shape of the distribution bell curve. I expected something like a barbell, meaning the stock's either going to go up 4% or down 4%, and those are where the barbells are around. But in fact, what you see on the distribution of the earnings is just a flatter normal distribution. So you would, and not even barbelled out at where you would expect the move to be. So, earnings is an art. We have some clients that do real well and study it, and a lot of calendar spreads and such. And in our back tester, we see a lot of people coming in, and you could do all types of settings, and we're seeing all types of settings being set and back tested there. So that's the main overall pitch of this earnings season is the lack of movement, and the sellers are really getting the better of the buyers, Mark.
You know what you've done now, Matt, by saying that. You have unleashed the hounds. They write into us constantly, right? Like, do sellers win or do buyers win? What they're really asking us is it okay to blast away a premium during earnings season? We've always told them, well, it's kind of middle of the road. Matt, you have just given them all the ammunition they need. They're going to be going out hitting the bid on every name they can. So well done, sir. You have unleashed the hounds on the premium selling side of the fence. We should say this is obviously a rare moment. Matt even pointed that out. It's usually not this biased. Would you say this is the most you've seen since you've been doing this, Matt?
This is the most I've seen since I've been doing it, and I never trade like that. I always at least flat units. So be careful out there. If you're going to sell anything, do a spread. And but what happens though, Mark, is after an earnings season like this, then they're going to really kill it next season.
And it'll be way too cheap. Yeah. I agree with you, Matt. I think there's so much more money to be made leading into earnings and then coming out of earnings than there is in actual earnings. And I think time proves that over and over again, that things are pretty fair value, especially around earnings. And so, trade volatility when you have a really good grip on it, not when it's a binary event.
Yes, very much so.
I agree with that. And one of the things that we do is we try to isolate the implied volatility going into earnings by taking out the earnings effect. So, you can imagine a large implied volatility, and you're trying to isolate what part of that is going to come off after earnings. And then comparing, so that's our expected implied volatility after earnings. And proves to be a good pivot point, meaning if it comes out above that, there's some profit to be made going down. If it comes out below it, there's some profit to be made going up. So it's basically what was the implied volatility before earnings. Now, this is X earnings volatility, but then when it comes off, where is it vis-a-vis that? So, yeah, I think there are some strategies that are, not a binary strategy, but something a little bit more rational.
Yes.
You could get around and make some money around earnings. That's not just betting on a high flyer or a crush.
They oversold it after earnings, or, it's moving around so much they're buying too much of it. You should, that makes tons of sense.
All right, speaking of making money or indeed losing money, it's time for listeners to maybe make some money on our wagers, or perhaps just have fun listening to us as we keep on into our final segment. It is time to open up and peer into our crystal balls.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
Well, this has been an interesting one here, looking at the numbers. Usually we see a little bit of movement, kind of indicative of the kind of going on in the market today, that VIX and Spikes are both kind of just shrugging their shoulders for pretty much the entirety of the show. They're both pretty much close to unched from where they were at the start of the show. We were right around a 16.5 still in Spikes and right around a 16 for VIX, which actually, looking at the numbers from last week, Andrew, who was on the Rock Lobsters on last week, he was on the dark side at 14.25. We did 2 picks and 14.70 for Spikes. I was feeling a little bit higher. I was 14.75 for VIX and around a 15 for Spikes. And then Dave Lincoln from the Short Vol Show, aka I think it's VIX Crushes, his channel on YouTube, crushing it here today. He picked 16 and he pretty much crushed it. Right? Pretty much a bullseye here. So, Dave, if you're listening, and you probably are, well done. You have earned yourself a return trip to the Volatility Views program with a pick like that. Right on the knocket. We won't give it to you for Spikes, but if you get one of them at this point, it's such a challenging thing that if you can even get one of them and within a tenth of a handle, you're doing pretty good, and you got it on VIX Cash today. So, well done. You are the winner, and you know what that means, Matt? Because our guest won last week, Dave's not here to claim his prize. He'll have to claim it the next time he's on. That means you get. I tell you what. I'll be nice. I will give you the choice, sir, Mr. Matt. Do you want to go first, or would you like? I'll let you even pick. If you don't want to go first, you can pick who starts it off. So up to you, sir.
I'd like who I call Super Mark. I'm changing Mark's name from the derogatory one to Super Mark. So I'd like Super Mark, and then Super Mark 2 to
Super
go.
Mark would clearly be me, so I don't know how you'd be referring to him. He is the manager of the Mini Metals or the Greasy Meatball, or you have a number of other terms.
The Mini Metals. That's an old one. We haven't used that one in a long time.
I go back deep, sir. I go back far. All right, so you want Mr. Meatball to go first? Have at it, sir.
I'm going to go on, let's see, where are we? 15.95 right now?
Pretty much.
All right, so binarily, I think that we could see it go to as low as like 13.90 or as high as 17 again, but I like it at 14.10. 14.10, folks.
You're getting oddly specific these days, which is unusual for you. 14.10. All right, so then I will roll on next. And Matt sounds like he wants to reserve his. Unless you want to go next, Matt.
All you.
Okay, so I will go next here. The true Supermark, the real Supermark, and not in a supermarket sense, which is where you can usually find the Greasy Meatball. Check in the beans aisle. All right, let's see here. So yeah, we're at about a 16. I'll make it easy. We were doing double picks last week, but since they're both such moving figures, I'll allow everybody to make kind of one pick, and we'll use them kind of interchangeably for VIX Cash and for Spikes. We all know they are separate. Usually it's around a quarter of a point to sometimes a half a point like it is right now difference. So there's going to be a little bit of difference there, but it kind of gives us it's kind of nice. It's a double pick, but it also gives us kind of 2 swings at the bat. So maybe we'll keep it that way to make life a little bit easier a little bit saner. So here we are, about 16 even, I should say, in VIX Cash, 16 half or so in spikes. We got another week of who the heck knows really what's going to happen. We could have China on the thing. They could come out tomorrow over the weekend and say, you know what, it's all done. It's all good. And then we're at a 9. Well, maybe not that low. We're pretty close in VIX Cash. So it is, as Mark alluded to, a very binary event. It's got I feel like we got a Brexit hanging over our shoulder, but it could come at any moment. And we could see the crush as a result. So all that a long way along to buying me a little bit of time. I don't think we have a little bit of erosion too, but I don't know. I was feeling a little bit erosion last week too, but not a ton. I'm going to go a similar route, pretty close to where I was last week. I was around 14 3/4, 15. I'm going to keep it right around that. I like that 14.75 level. So I always mock, I should say, the meatball for keeping his pick every week. I very rarely do. This is a week where I'm going to do it. I do kind of like that level, 14 3/4 to 15 or so. All right, Matt, I bought you some time, sir. Have at it. You can do one pick for both or a double pick, whatever you feel like.
I'm feeling a big summer crush coming on, so I'm going 13 1/4.
Whoa!
Wow, 13 to 13
hey,
and
your
a
lips
quarter.
to God's ears. That would be great for me.
I think
your
a lot
lips
of our
to
audience.
God's ears, yes.
I think a lot of our audience would be down with that, listeners. Unfortunately, that music means we did it. We're done. We've gone through another fantastic episode of Volatility Views. Let me just recap there really quickly for you, listeners. On the dark side, on the downside, we got Matt holding down 13 to 13 and a quarter. I guess if he's going to do 2, I should do my range too. I should be good too. So I'll say 14.75 on the VIX Cash to 15 on the spikes. And we'll let Mr. Meatball just hang out there with 1 at 14.10 for both. So there you go. You got a nice range of about 1.75 to 2 points, depending on how you're looking at it there. So interesting stuff. Where are you guys feeling? What are you feeling for next week? Let us know. Remember, it's not the close. This is at this time next week, end of the show. Speaking of end of the show, we got to wrap it up. But before we go, let me go back around the horn. Let's start with you, Matt, as our guest, who so nobly volunteered to dive into the breach when I was summoned away for last-minute jury duty. So we had that question from that listener. I'm trying to pull it up right now. The latter part of her question, it was Nat M. She wanted to know, she said, fun show, thank you. And then also, can you guys do some more on the earnings volatility front, where I hope you liked our little rundown there. We always do it whenever Matt's on. We kind of save it for him. And then she asked another question, can I sign up to receive those earnings straddle reports? Well, of course, we put out a nice kind of free version for you guys to check out over there at theoptionsinsider.com. But Matt, if they want to upgrade to the premium version, get all kinds of good stuff, and maybe check out some other stuff, where should they go? What should they do, sir?
Yeah, orats.com. You can email me, Matt, at orats.com, M-A-T-T at orats, and happy to send you all this information. We do a summary of all the moves, so you could look at your favorite stock and see what they've done vis-a-vis what we thought they would, or at least what the market thought they would be doing. Yeah, it's good times over at ORATS. We're very busy. Lots of back testing, lots of data going out, lots of earnings, and appreciate you having me on, Mark and Super Mark. That's a homage to Super Dave, in case you were wondering.
I guess.
I'm a big fan of Super Dave.
That nickname, I'm just telling you right now, it's not going anywhere here on the network. As the arbiter of networks here and nicknames, there will never be a Super Mark on my network. All right, unless it's me. All right, but that's a conversation for another day. All right, but Nat and everybody else out there who asks this question all the time, Matt is the place to go, and orats.com is Matt at Orats, O-R-A-T-S is the place to go. So Nat and everybody else, we know you guys like this data because you ask us for it all the time. You get the nice kind of a bite-sized version at theoptionsinsider.com, and if you want more, Orats is the place. They got a lot of great stuff. You should check it out. They have a blog, all kinds of good stuff. And Matt, I'm hearing whispers behind the scenes of maybe some cool stuff coming from you guys and maybe some partners in the future. I won't say what it is, but I'm hearing good stuff, so I'm excited for you, sir.
Oh, yeah, there are. We have quite a bit in the hopper. I can't wait to get back and tell you all that's going on.
I often joke I'm like the priest of the options market. All the rumors, all the sins, they all come through me at the end of the day. So I know it all. So I've been here. My to use a Game of Thrones reference, my spiders, my sparrows are out there listening for me. So interesting stuff. Stay tuned to Orats. And speaking of interesting stuff, Mr. Meatball / the name we shall not mention, if you want to check you out in person, maybe see you do some motorcycle tricks. We don't know at your upcoming summit. Has that? I know there's one spot left in the VIP. Is that still the case, or is that gone?
I think that may or may not be filled. Tell you, if you sign up, I'll get you in. But because you're an option insider person, but we're pretty full up on VIP. We got room for, I can squeeze in one or two, but we're pretty much full up. The general audience one is wide open. We got plenty of room there. If one, go to optionpit.com events and sign up for our Option Pit Pro Traders Summit. Alternatively, you should be a subscriber to the Options Insider email list. If you want us to know that you came from Mark, sign up through that email that he's putting out to join us, join the party in beautiful Chicago, Illinois, and at Wrigley Field, and at Gibson's, and at Sherry's, and who knows what other kind of fun action. You get to meet me, meet Mark, meet Mike Tusaw, meet Andrew, meet debits and credits and big blonde hair. It'll be a great time. Come go to optionpit.com/events.
There you go, optionpit.com/events to get that ball rolling. Take that last slot if you can. Otherwise, you come in for the public sessions. Those are pretty fun. To optionpit.com/events. A lot of places to go. Oras.com to check out more about their blog and their premium stuff. Of course, MIAX.com/spikes. MIAX options, I should say, .com/spikes is the place to go for all the information and all you people asking about the future. I'm sure as soon as that's available, that'll be up there as well. Cool, fun little video there for the spikes as well. And on behalf of Matt, Shelly, Mark, and indeed myself, I want to thank all of you out there for downloading, streaming, and subscribing to the show. And we'll see you back here next week for more Volatility Views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.